Hey, what's up guys? Omar here, broker and CEO of Alden Mortgage and Ome Realty. So this is going to be your mortgage rate update. Now, there's also something else that's going on really weird. Now, in the world of real estate, we always have a saying, when certain things start getting pushed, and I'm talking about loan products, when certain loan products start getting pushed in order to qualify people into getting homes that relatively have a low, like almost like a teaser rate, just to get people into homes, you know things are taking a turn for the worse. Now, back in the day, we used to have something that's called the negative amortized loan. That was something that gave you a super low interest, super low payment for like 6 months. And then you got hit with sticker shock. Adjustable rate mortgages are getting pushed really, really hard. And then there's another loan product that's getting really, really pushed hard, which I will go ahead and explain to you exactly what that loan product is. And then also mortgage applications. How low has it actually been? This is a potential, I mean, we are in a mortgage collapse. As everybody knows, mortgage companies left and right are just dying everywhere. People are laying people off. Everybody is going under. I don't care what anybody says as far as the news goes. As far as real estate goes, this is a guy who does this day in and day out every day in my life, except for now I might as well be unemployed because I'm not doing shit. But let's get on with the mortgage rate updates. We are, by the way, still lower than any major bank out there. Majority of banks right now are roughly teetering around that 7% mark, and we're still somewhere in the 6s. So if you were interested in any one of these mortgaging products, link in the description below. 50% commission rebate, 0% listing on selling your current home, all link in the description below. But little thing between you and I, okay? Even though that I say this in a lot of my videos, okay? Even though I say, you know, I offered these programs and I offered these, if you are in a position to go ahead and buy, do you really, really want to go ahead and dump into the peak of the market right now where home prices are at the highest level, interest rates? Now, my job is to go ahead and make loans. That's what I do. I go ahead and do the transaction, I do the negotiating and all of that, but my number one priority is always to make sure that you as a consumer, as the person that is buying a loan, buying a house, make sure that I have your best interest in front of me. It seems so stupid right now to go ahead and buy. I say, wait, but who am I? This is just a personal opinion. Opinions are like assholes. Everybody has one. But let's get on with the mortgage rate update. 30-year fix will be sitting at 6.35%. And this, of course, is going to be at as of 10/12/2022. 30-year fix will be sitting at 6.35%. 15-year fix will be sitting at 5.34%. 30-year high balance will be sitting at 6.45%. DSCR loan, which is a debt service covered ratio loan. This is a loan product for people who want to use the rental income that they have coming in to go ahead and offset the debt that's going out, which is your principal, interest, tax, insurance, and your other running costs. This is like mainly for the landlords and stuff like that. That'll be sitting at 8.5%. Bank statement loan, this is for people who don't have any tax transcripts. They have no pay stubs. They have nothing. They just have, I don't know what kind of cash business you're into, whatever it is that you're into, but that'll be sitting at 8.50%. FHA 30-year fix will be sitting at 5.71%. 7/6 adjustable rate mortgage will be sitting at 6.30%. USDA 30-year fix will be sitting at 5.74%. VA 30-year fix will be sitting at 5.74%. And then hard money fix and flip will be sitting at 9.70%. You see a property, you want to go ahead and fix it. Now, those are usually short-term loans where you want to just go ahead and get the property, you want to fix it, flip it for whatever it is. That is actually a pretty good loan. That's 80. All you have to do is bring 15% of the total amount that the closing purchase price is going to be for that product, which is going to be your down payment. And then we have another piggyback loan that'll do 100% of the rehab. How much it's going to go ahead and cost to go ahead and fix up that property. But as far as mortgaging goes, mortgaging applications have hit an all-time low. Now, 2008 wasn't the lowest that we've ever hit in mortgage applications. The lowest we ever hit was in 2010. And 2010, the lowest we've ever had was at 170, which I'll pass over this home buyer demand right now. We're sitting at 174 right now on the index, on the purchase index. 174 right now as far as the mortgage index on demand, which is freaking horrible. Now, now as far as loan products go, now we have a lot of things in the world of real estate. We've had zero down payment programs. Okay, so this new banks that are coming out with, oh, we have no zero down payments and stuff. This has existed. There's things that are called down payment assistance. There's down payment grants. These are piggyback loans where you go ahead and subsidize one loan with a down payment that you have with another loan. That's all that it is. This has existed as far as, and then we also have what's called NINJA, no income, no asset, or no income, no job, or no asset loans. These all still exist. Now, they're not as predominantly popular now as they were back in the day because, of course, the 2008 crash completely just screwed everybody up. We had NONI loans, non-owner, non-investment loans, asset qualifier loans, where it's like no employment, no income, bank statement loans, investor cash flow loans. These are the loan products that are out there right now, especially for brokers like us. This is not big bank stuff. This is more like guys like me. Those loan products are crazy how much they existed. Now, the one that majority of people are not really taking into consideration is something that is going to be pushed in. Well, it's been being pushed. It's actually called a 3-2-1 buy down or a 2-1 buy down. And for the sake of argument, I'm just going to keep it simple and do the 2-1 buy down. Now, 2-1 buy down, what happens is you have yourself a property. On that property, you have to go ahead and get a loan. Now, your debt to income is not really that much. There's something in the FHA that's called a graduated payment loan, but we're going to go ahead, and it falls in the same guidelines, kind of like that. But this is not that great. Whenever you have a loan product that has something that's called a sticker shock, it is not that great. So let me break down what happens, okay? So for a 2-1 buy down, let's say right now, hypothetically, our interest rates right now are at 5%, right? At 5%, we're gonna go ahead and qualify you at 3%, which is 2 points lower than your current rate, okay? Then the second year, it's gonna go to 4%. Then on the third year, then it's going to go to the rate that is at right now. Now, there's a big question. What happens with the amount of money that you had to pay on interest? Now, there's two ways you could go about this. Number one, the seller could go ahead and pay for that. They could do that as a seller credit, a seller concession, however you want to go ahead and word it. They could go ahead and pay for it, but that's not what's really been happening. What's been happening is that you, the consumer, the person who's buying, you are going to go ahead and get that as an upfront, which we're going to go ahead and tie that into the loan, and you're going to have to go ahead and pay that. Now, this is purely to go ahead and get you qualified. Now, if you are qualified at 3%, is this a good product for you to be at 5% in the next 2-3 years? Absolutely not. Now, majority of these loan products, they're going in with something that's called a bespoke tranche opportunity. Now, everybody has watched The Big Short, okay? Everybody has watched The Big Short. At least I hope everybody has. I mean, I'm a mortgage broker. I'm a finance guy. So in my world, anything that has to do like Margin Call was a great movie. Big Short was a great movie. Boiler Room was a great movie. These are all like some of my top favorite movies. But back in the day, they had a collateralized debt obligation, a CDO, which completely ruined everything. But now we have something as of 2014, 2015, which is called a bespoke tranche opportunity. Now, these pretty much what it is if you take a bunch of loans, right? A bunch of loans, and you go ahead and put it into a little block, and then you go ahead and sell it in a secondary market. Now, what's a bespoke, which if you ever had something bespoke, it's like a customized type of thing. One-offs, right? Bespoke tranche opportunities now not only have mortgages in them, they have auto loans inside of them, they have AAAs, Bs, they have a bunch of different things. Now, the world of auto loans is kind of where this is at too. So if you're taking these 2-1 buy downs, you have auto loans, you have all these other different loan products that are going to go ahead and get structured into one big block of loans. If one of them collapses, that means that they all start collapsing. That means that this is what's happening to the market. It's going to blow up because this is all credit. This is people buying bonds. Bonds is debt. Debt is a promise to go ahead and pay back. Now, when you have these auto loans, which is still the subprime lending, people still buy off of subprime auto loans that still exist. Whenever you go buy a car, you could, if you wanted to, you could go right now and go buy a car for like 20-30% interest rate if they really want, because they don't give a damn. They're still not regulated. You could do whatever it is that you want in the auto industry, which the auto industry, as everybody knows, has been such a crazy markup. People are still buying and they're still financing, but they're financing at what cost? Now, the same thing goes for these 2-1 buy downs, these 3-1 buy downs. 3, 2, 1 buy downs. Now, when is the sticker shock going to go ahead and kick in? Now, if we're pushing this a lot, that's what we're doing right now. We are pushing this a lot. Everybody is like on this, like on the bandwagon of the 2-1 buy downs, just to make sure that business still rolls in and real estate agents keep getting their business in. It's going to be a little bit of a rough one, Tater. Not going to lie. It's not going to be a fun one. It's really it's weird, and it's we're kind of like just in the midst of witnessing everything happening. It's deja vu. I've been in this business for about 20 years now, and it's getting there again. It's getting there. Well, if you like the content, please go ahead and like, subscribe, comment for up to 50% commission rebate, 0% listing on selling your current home or any mortgage assistance. Link in the description below. Until next video, guys, I really appreciate you watching. Peace.